Hey guys, welcome back. Today we're going to be talking about short selling. We're going to cover what short selling is, how it works, what I look for when I plan on shorting, how exactly we execute a short, and the potential risks involved in shorting. So, what is shorting? Shorting is essentially you betting the stock is going to move down, and this is how you make money off the stock. In practice, how this happens is you go to your brokerage and you borrow shares from them. This means you don't pay them yet for the shares that you're borrowing. You then turn around and you sell those shares to a buyer. This is great if you have cash in your pocket, but you still need to pay back the brokerage for the shares. And how does this happen? Well, you purchase those shares at a convenient time for yourself. Ideally, since you sold the shares to someone else, you would like to cover your debt to the brokerage at a better price so you get to keep some of the money. So let's run this through an example. Let's say stock ABC is trading at $6.50 and you decide that it's overextended and it's time to open a short. So you open a short at $6.50. You then sell those shares to someone else at $6.50. That's all automatically done. You don't have to worry about that. The second you open a short, it does sell those shares to somebody else. And then ideally, let's say the stock moves down to $6 and you cover your short, which means you pay back the brokerage for the shares that you borrowed. You only have to pay back the $6 per share now because that's what the current price is. So you made 50 cents per share off of that trade you took. And that is essentially short selling. Great. So now that we know exactly what short selling is and how it works, let's talk about what we look for when we decide we're going to short. First, we're going to go over some key things to look at, and then we're going to go over an example. Number one, the stock has made its way to an area of resistance and it looks like it's being rejected. This can look like it makes multiple attempts on the 1-minute chart to break through a price, but fails to do so. So that's a good opportunity to take a short trade. The stock has come down to a strong support line and it breaks down from there. Usually, if you're hyphy like me, you'll probably take an entry right then and there, but if you're patient, you'll want to wait for a retest before you jump in just to make sure it is in fact headed down, but another good opportunity. 3, the stock has gone from low volume to high volume with a huge price increase during market time. This is what I refer to as a gap and crap. When a stock shows no interest in moving and then all of a sudden a huge amount of buying volume comes in, it pushes the stock really, really high. That's generally a good time to short. The buyers will die off quickly and the stock will begin to inevitably fall. So what happens with this, it's a little bit of psychology. It could be an institution purchasing a large amount of shares, or it could just be a whale buying a lot of shares. In any case, it brings eyes to that stock because it pops up on people's scanners. They see that something is starting to move, so then it creates more buying volume because people are starting to get that FOMO and they want to buy into it. So it pushes the stock even higher. So you could see the stock move up 15, 20, 35, 50%, something like that. And then at that point, you'll see the volume start to drop down dramatically again because there's no more buyers. And at that point, if the stock is shortable, you'd be looking to get in around there. Because the stock will inevitably start to move back down from there with no more buyers. So the last thing I want to mention before our example is 2 key support and resistance lines. And they're both kind of dynamic. We use VWAP and the 200 EMA. The VWAP shows us whether the trades are bullish or bearish, and the 200 EMA acts like an elastic band with the price. The price will always find its way back to the 200 EMA. As for VWAP, what we mean is if the stock is trading above VWAP, it's usually more bullish for short-term investors. And if it falls below that VWAP, most traders are going to be looking to short or stay out of it. So that usually means the stock is going to decrease in value. All right, so let's use a little bit of what we know now to see if we can pick out a good short entry on a stock. Today, we're going to look at PMVP. This kind of ran on Friday. It was kind of on and off, but there was a really good short opportunity in the morning here. So let's take a look. So we see that it opens. We see a lot of buying pressure kicking up. We're seeing the stock really increase in volume and price. We're seeing it go up even higher here, somewhere around here. One thing to notice is that the 200 EMA is very far away from the price action. So that can kind of give us an indicator of, something that we might be looking at and saying, okay, well, this is going to start to come back down to this 200 EMA. So somewhere around this $18 mark or maybe even the $17.50 mark, you're thinking, okay, this looks like it's got to have some sort of major pullback to it. We saw a huge amount of volume coming in. We see that it's very far away from that 200 EMA. And now we're seeing that after this big run, we're seeing a couple red candles here. This is usually a pretty good sign that we're going to have a pullback. So maybe you start a short somewhere in here. So let's just go ahead and say like right here. We saw the break of that high candle going down lower on a red candle. So that's probably a pretty good entry. So then we see the stock drop. So at this point, when you see it hit this VWAP line, this could be a really good indicator to cover your short. We know that the VWAP line can be a very dynamic support and resistance line. If you gave it a minute to see if it could retest, we would have seen that it fell through. So we may have continued to hold our short here. We see that the price is starting to find a floor. We haven't really moved lower in a couple candles here. This could be an opportunity to cover your short right here. If you continued to hold, it would have went down even further. All right, so around this area, we start to see a little more resistance. We're going to start to see that it doesn't quite get very super close to this 200 EMA yellow line here, but it does have an opportunity later on to continue on and actually cross down. So we'll see another short opportunity here. So probably somewhere around here is a good cover. Somewhere around here would have been a good cover, or seeing if it broke that VWAP would have been a good cover. We see it start to move back up. So here we start to see something else, right? We see that it's coming back up to that VWAP line. So if you're looking for a short opportunity, we say, okay, you see that the VWAP line is very close. We see that the stock has moved up very close to that. We see that the bands are actually pretty tight and not quite hitting that VWAP line. So this could be a sign that, you know what, this is probably about as high as it's going to go. But let's just keep watching here for a second and see what happens. So we get very close to that VWAP line again. Starting to make that high little push. We're starting to see another drop. So maybe we took an opportunity to take a short up here when we got close to that VWAP line. We have 3 attempts at it. Slightly cross above. Let's see if it holds. We have a retest, and it doesn't hold. Looks like it's probably going to fall back through. Another retest. And we start to see it come back down. We start to see a little bit. It's making a new low here for a while, so that's a good sign for a short. Eventually here we should see it, start to cross that 200 EMA line. We didn't really see much of a retest. It just continues on its way down, and that was another short opportunity. So here in the stock, we saw a couple opportunities where you could have taken some profits on shorts, where you could have opened some shorts, some potential things to look for. We're not going to go over all the examples of everything I pointed out, but this is a good example of a couple things. We saw some key support lines and key resistance areas to watch for and to keep an eye on to make sure that we are available to the idea that this stock could be going down and we could see a short out of it. But let's get back to the slideshow now. All right, so now that we have a good idea what short opportunities look like on bullish stocks, let's go over the actual execution aspect of it. It's easier than it sounds when it comes to executing one of these trades. You first need to see if shares are available to short. Usually somewhere on your brokerage, it will tell you on IBKR, it's a little yellow light on your order entry window. It can be green, yellow, or red. Red is a no-go, yellow is hard to borrow, so you may get charged for it, and green means it's go time. After you type in the amount of shares you want, you just hit sell instead of buy, and this initiates a short sale. Now, to close your position, you just buy those shares later. So you just type in the amount of shares you borrowed and you hit buy instead. It's also worth noting that some brokerages actually just have a short button instead, or there's multiple ways you can initiate a short trade. It's all broker specific, so you'll have to figure out how to do it on your exact broker. But on IBKR, it's just a little yellow light that shows you, or a little green light that shows you, and then you just hit sell instead of buy, and it'll usually prompt you to say, are you sure you want to short this? And you would just say yes. So some things to keep in mind is just because it's a short doesn't mean you don't want safety. Make sure you still have your stop losses on your trades, and remember to think about taking profits in key areas like we were showing. Lastly, we need to talk about the risks associated with short selling. We want to talk about the infinite risk potential. When we purchase stocks, the worst that can happen is a company goes bankrupt and it goes down to $0 a share. What that means is we lose all our money we put in that stock. So the worst case scenario is $0. You lose all the money you had in it. But that's not the case with short selling. In short selling, there is no bottom or top technically. So let's say, for instance, you shorted Tesla at $5. Well, what's the price of Tesla today? I think it's somewhere around $600. Let's just say it's $600. Disregarding the splits for this example, you just lost like 120 times your investment. So every share you borrowed at $5, you now have to pay back $600 per share. That's an astronomical loss. This is where you need to be very aware that this can happen sometimes. And this has happened in the past. In fact, there's been a couple people that actually ruined their trading career with shorts that just went so wrong. So always use risk management, always use stop losses, and don't average up on a short unless you know what you're doing. Other than that, that's it for today, guys. So make sure you like and subscribe, and I will see you traders later.